Nvidia is at all-time highs. But according to Brad Gerstner, the recent rally isn't really about H200 chip sales to China. The real reason? The most important AI company in the world simply became cheap again. And the market noticed.
What should we make of what Nvidia is doing and what Jensen Huang could bring home on this trip?
Well, I mean, the most unusual thing is Nvidia didn't do anything for 6 months as the rest of the semiconductor trade, really catapulted to new highs. So over 6 months, remember, Nvidia hit $210 a share about 6.5 months ago, and it was flat over that period of time.
Yeah.
And so, as our largest holding, it's almost 20% of our overall portfolio. But it's actually been a drag from a performance perspective up until recently. On the March 30th low, I think it hit 170 or 172 bucks a share. And so the catch-up here really hasn't been about China at all, Scott. And by the way, China's de minimis at this point to Nvidia. They've announced $1 trillion over the course of the next 6 to 8 quarters of demand on Blackwells and now Vera Rubins. And so this is a little bit of icing on top of the cake to be able to sell their older H200s, to China. I don't think that's what's moving the stock. They're going to report earnings next week, and I think what's moving the stock is everybody's looking at the entire complex and saying the most important company globally in AI, the best company executing today in AI is Nvidia. Why is it trading at 14 or 15 times fully taxed GAAP earnings?
What do you think is another candidate that we're ignoring right now that has this type of potential?
I mean, the fact of the matter is I'm not smart enough, nor are, most retail investors at home to pick it, that closely, right? The reason we've been in Nvidia is because we know they are the market leader. We know that they are the cheapest in the trade. And so we just had to assess at some point in time, numbers would matter. The economic law of gravity here is that if they deliver the returns that we expect that they're going to deliver, then one of two things is going to happen. Either they'll buy back all their own shares because the market won't value them, or the market will buy them. And I think the market at this point in time is saying this doesn't make any sense. But if you said to me, Josh, Brad, what is the catalyst that finally got this thing moving? I couldn't tell you.
Then the conversation shifted to today's IPO Cerebras, where Brad Gerstner is also a major investor. And there were 3 major takeaways. First, inference demand is exploding. The AI world is shifting from pre-training to inference. Second, Cerebras' core advantage is delivering low-latency inference tokens, which is becoming increasingly critical in real-world AI applications. Third, AI's biggest bottleneck right now isn't the models, it's infrastructure. There simply isn't enough power or data center capacity to meet the demand.